Hey everyone, welcome back to Corporate Decoder. Today DBGI just filed an 8K and I am seeing some significant developments that could really shape their future. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced a major partnership and provided some very optimistic revenue guidance. But let's dig into what that really means. Alright, let's dive into what Digital Brands Group Incorporated, or DBGI, has been up to. This filing an 8K usually means something important has happened, and in this case DBGI has two key announcements. It is essentially a way for them to quickly inform us about major events. The first big piece of news, dated the 7th of July, concerns their Avo brand and a strategic partnership. Avo is teaming up with the largest college bookstore chain in the United States. Think about that, the biggest chain with over 1,000 locations. This is a pretty huge deal. What is really interesting here is that Avo will take over the prime retail floor space currently occupied by Lululemon in all these bookstore locations. That is a direct move into a strong competitor's territory. DBGI plans to use existing in-store concepts focusing on customization and better customer experiences. This expands their physical footprint significantly and puts them directly in front of college students, a key demographic for many apparel brands. Now for the second, and perhaps even more eye-catching, announcement from the 8th of July, DBG released their third quarter 2026 revenue guidance, projecting between $8.5 million and $11.0 million along with positive net income. This is a massive jump. They are talking about a 300 to 500% year-over-year increase in revenue, to put that in perspective. If they were making $1 million last year, they could be making $4 to $6 million this quarter. That is not just growth, that is explosive growth. And it is not just about revenue. They are forecasting a significant turnaround from a $3.5 million net loss last year to break even or even a profit. This kind of shift is what investors live for. What is driving this optimism? Two main things. First, a collegiate expansion going from just one university to 18. This mirrors the Avo partnership we just discussed and shows a clear strategy to tap into that student market. Second, they mentioned a landmark government contract for a scale deployment program across 3 cities. That sounds like a substantial, potentially long-term revenue stream. They've also attached these press releases as exhibits, which is standard for these filings. Exhibit 99.1 is the one about the Avo partnership, and Exhibit 99.2 details the impressive Q3 guidance. The report is signed by John Hilburn Davis IV, the President and Chief Executive Officer. This is the leadership team putting their name behind these optimistic projections. Now, let's step back and look at the bigger picture here, using some of the context we have outside this filing. DBG's market cap is currently around $18 million with a stock price under $1. They are a consumer cyclical apparel retailer with a relatively small employee count of 33. This filing presents a narrative of a company on the cusp of a major turnaround, driven by strategic partnerships and significant contract wins. However, it is crucial to be critical. These are projections and guidance figures, not actual results yet. The jump from a net loss to profitability and the massive revenue surge needs to be monitored closely in future filings. We've seen companies promise big turnarounds. The government contract is particularly intriguing. These can be very lucrative, but also subject to bureaucratic hurdles and changing priorities. Is it a one-off or part of a larger ongoing initiative? The partnership with the college bookstore chain sounds solid, leveraging existing infrastructure for Avo's brand, but taking over prime retail space from a company like Lululemon, a well-established player, will require excellent execution. Looking at historical trends for smaller apparel companies that announce such ambitious growth plans, the key is execution and sustainability. Many smaller companies struggle to scale rapidly without compromising quality or incurring massive debt. With a market cap of $18 million, any significant misstep could be magnified. The risk I am watching is the company's ability to actually deliver on these Q3 projections. The transition from a significant loss to profitability requires precise cost management and strong sales execution. If they miss these targets significantly, the stock could face serious pressure, similar to how companies like Rite Aid previously faced challenges scaling and managing profitability. The success of the government contract and the Avo retail expansion will be critical indicators. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you liked this analysis and want to see more, hit like and subscribe and join our Discord community linked below.